Hello friends, a very warm welcome to my channel. In this video, we are going to do a crisp analysis of one of India's biggest power generation, transmission and distribution company, which is Tata Power. So this company is gradually transforming itself completely from thermal power to renewable sources, which we'll be discussing in detail in the coming slides. So if you're new to the channel, please do subscribe and hit the bell icon to get all the updates on the new videos which I upload. And if you're not a part of our Telegram channel, do join today by searching my name on Telegram. Every day morning, I share the market analysis which will definitely help you in your investing journey. So let's start the analysis of Tata Power. This will be the flow of our presentation. We'll discuss the business model in brief. We'll look at the chart in the last few years. We'll look at the company's financials. We'll understand why the stock has given a rise post-COVID. What is the outlook of the management going forward? What are the valuations at present? What are the risks involved in investing in this company? And by discussing all these things, we'll try to form a view as to whether the existing investor should hold the stock and whether the new investor should enter or not. So Tata Power is into generation, transmission and distribution of power. So there are different activities in the value chain. Power generation is separate, transmission and distribution is separate. So there are certain other companies which don't do all the three, whereas Tata Power does all the three. In fact, in the renewable energy space which the company is entering now, in fact it has already entered and gradually expanding now, it is developing a completely vertically integrated ecosystem. So right from the fuel cell manufacturing in a solar plant till the EPC, then power generation, distribution, everything is done by Tata Power itself. So what the company is targeting to do is by 2030, 80% of their portfolio they will transform to the green energy, and by 2045, 100% of their portfolio of power generation will be through the renewable sources, and in a phased manner the thermal power generation will be phased out. Broadly, if you see in terms of verticals and numbers, these are the categories of business or segments. So thermal power generation contributes about 4,800 crores of revenue out of the total 15,000 crores of revenue to Tata Power. The renewable segment contributes about 2,000 crores out of the 15,000 crores. This also includes the EPC business. Then the transmission and distribution segment contributes about 9,200 crores. So still the major revenue is coming from transmission and distribution and thermal power generation. But going forward, there will be a substantial change in this share of revenue. There are certain projects under construction which after completion will change the entire landscape from the present, which is about 62% from thermal and 20% from solar. After the completion of these projects, it will become 49% from thermal and 51% from solar and other renewable sources. So the immediate goal is to bring it above 51%, and thereafter in a phased manner the entire portfolio will change to the renewable energy. So this was a brief understanding of their business. Now when you look at the chart, there has been a long-term consolidation in the chart for many years up to the COVID, and post-COVID we saw a complete turnaround and a huge rally in the stock from the COVID lows. And again in the last 1 year, the stock is in a consolidation phase and now attempting to come out of the consolidation and trading around 250 zone presently. In terms of revenue, you can see pre-COVID there is a stagnation, in fact even a decline if you see the last 10 years trend in revenue. But post-COVID you see a rise in revenue from about 29,000 crores to almost 55,000 crores in FY23. When you look at the profitability, it is growing faster than the revenue because we have seen certain margin expansion in the business. So from about 3,000 crores EBITDA in FY19, the EBITDA has risen to almost 7,700 crores in FY23. The EBITDA margin saw a sharp increase from about 10% to 21% in FY21, but thereafter, maybe due to the increase in raw material prices in the energy, which is the coal prices, there has been certain pressure on the margins, and in FY23 the company delivered just about 14% EBITDA margin. One more thing which we have to closely look at in this company is the debt level. Now why this is important? Because the company is trading at a very high debt level and the interest cost on this debt is eating away quite a lot of profits of the company. And unless this debt level comes down, we cannot expect a complete turnaround in the company's business. In fact, that will also correlate with the share price. So if you look at the debt level in FY19, it was somewhere around 48,500 crores, which came down a little about 46,700 crores in FY21. The company aims to gradually become debt free in the future, but that has not substantially seen in the numbers. If you look at the FY23 debt level, again it has bounced back to 52,900 crores. So why is this happening? Because the company is still in a growth phase, especially in the renewable sector, and the entire money is getting consumed in the capex expansion in the renewable energy space. So unless the company generates free cash flow, repayment of debt will not happen, and the margin expansion at the bottom line cannot be seen because the interest cost will remain the same. So this is one metric you should closely track if you are invested in Tata Power or if you are planning to invest in Tata Power. Now, what has led to the increase in the share price post-COVID is post-COVID, due to the growth in the economy, the power consumption has increased. The company has ventured into new verticals aggressively, like the solar, wind. Then in solar, they are doing EPC, they are doing rooftop solar, they are doing solar pumps. And the way the electricity was distributed, the customers were billed, everything has changed, and the company is introducing efficient methods of transmission as well as bill preparation using smart meters. So this is increasing the revenue in the transmission and distribution segment. Now, what is the growth outlook which the management is giving going forward? The EPC order book, this also includes the orders within the group. So Tata Group itself is giving substantial orders in all the segments to Tata Power. So the EPC order group, which includes the group order book, still is about 4,200 megawatts, which is a very big order book, which is amounting to about 17,600 crores. So Tata Power is also into the EV charging space. So somebody who wants to play the electric vehicles theme can also invest in Tata Power as a ancillary industry. So 4,300 plus public EV chargers have already been installed by Tata Power, and every quarter this number is increasing. More than 50,000 home EV chargers are already installed, and again this number is increasing every quarter. When you talk about the rooftop solar setups, they have an order book of more than 2,500 crores. This again includes the group order book. And when we talk about the agri sector, which is the solar pumps, more than 1 lakh units have been already installed by Tata Power. It will be interesting to note that as the company wants to be a vertically integrated player, they are already working on manufacturing of solar cell and modules. So they are setting up a manufacturing facility of 4 gigawatts each for both of these products. So at present, both of these things are majorly imported from China. So going forward, these will be manufactured by India by companies like Tata Power, and the government is also promoting the manufacturing in India. Now, when we talk about the valuations are not that expensive. It trades at a market cap to sales of somewhere around 1.5 times, and the P is just about 23. So these valuations appear to be reasonable on face of it, but for these valuations to sustain or the company's stock to get re-rated beyond these valuations, two things have to be closely watched for. The growth momentum should continue and the debt levels should go down, leading to expansion in the profit margin of the company. Now, what are the risks of investing in this company? The company has to generate free cash flow either today or tomorrow. Only that will help in reducing the debt levels of the company. The new space in which the company is entering, which is the solar energy space, there is already competition in this space. In fact, the competition is increasing day by day. So the company's ventures have to be cost effective going forward. The promoters holding is less than 50% already. So in order to repay the debt, the company cannot issue fresh equity shares unless the promoters also contribute in the equal respect. Otherwise, the promoter shareholding will further go down. So after understanding the business of the company, the fundamentals, the growth plans, the risk, what is the view on the stock? If you're already invested in the company and you are patient enough to hold for long term, then you can continue to hold and watch for a few quarters their renewable energy business as well as their debt levels. And if you want to invest afresh, you should consider such stocks only if you're a long term investor, because the real re-rating in the stock will happen only when the renewable energy space starts contributing majority in the revenue of the company and the debt levels decrease, leading to the expansion in the profit margin. So this will take substantial level of time, and only if you are such a patient investor, you should definitely consider investing in such stocks. Please note that this is not a buy or sell recommendation. This is only a case study discussion for educational purposes. So thank you for watching the video. I hope you like the crisp analysis of Tata Power. If you want me to make videos on your favorite stocks, don't forget to mention those names in the comment section. Thank you for watching and have a wonderful day.